Instacart making its big public debut as the first notable venture-backed tech IPO in the U.S. since 2021. The long-awaited IPO, however, potentially leaving many of its later investors with paper losses. Instacart opened at $42 a share, reaching a nearly $14 billion valuation. That is still a sharp contrast from a $39 billion valuation in 2021. Despite the company currently finding itself in a better position as it recently began generating profit, the company's valuation adjustment comes after rising interest rates have led investors to avoid high-risk companies. And Josh, we're talking about this because you have to wonder, a lot of these unicorns that are on the sidelines, they're sort of looking at Instacart to say, well, what's the market appetite right now? We're talking specifically about these paper losses because this is a company that was valued so highly in the private round. $39 billion is what we're talking about. And to put this in context here, T. Rowe Price, just one company that was involved in the funding round on the private side of things, the Wall Street Journal reporting that their growth fund invested $86 million in Instacart back in 2020. The value of that investment now down by more than 40%.
Wow.
When you consider where the shares were listed for the debut.
Yeah, I mean, it's a fascinating wrinkle to the story. So late investors, maybe saddle here with paper losses, they're underwater. And you've been reading kind of the tone, the language of Akiko out there in Silicon Valley. I thought it was really interesting listening to Byron Dieter, well-known, well-respected venture investor out there with Bessemer. Sort of the language he was using out there, saying here, things have changed. And really his friends, his colleagues, private investors, he's saying it's a new reality of a reset valuation world they're going to have to adjust to.
And the question, I guess, for these companies that are waiting on the sidelines, are they willing to come to market at a lower valuation? Is this sort of an acceptance of the higher rate environment where they're going to have to compete in? Interesting enough, Klaviyo is another company that we're watching for the debut there. What they're looking in terms of the pricing range for their IPO is closer to what they commanded in the private funding round, roughly $9 billion. So we sort of don't want to say, look, all these companies that are coming to market are going to come at a lower valuation, but Instacart certainly be seen as an example of what's to come potentially.
Yeah, I think you mentioned the founders of these private companies, and it really is this interesting moment because on the one hand, Akiko, they see a stock market that's ripped higher this year. They've got employees that are waiting for a liquidity event. If it's not going to be an acquisition, they're waiting for a public debut. And listen, they're like the rest of us. They've got life costs, right? Mm-hmm. They'd like to buy the house. The kid needs braces. On the other hand, right? On the other hand, though, you bring up a good point. Are they as excited to make a public debut when they know that listing price? It might look a whole lot different than their last funding round.
Well, and the other question is, if they don't look for that exit, what are the other options that are available? We've been hearing a lot from VCs about what's been happening in the private side. It's not like there's a lot of capital that's flowing into late stage rounds on that side as well.
Yeah, no, absolutely.